Welcome back to VTV News. Now, according to the recently published report by HSBC, Vietnam will become the world's 10th largest consumer market by 2030 with the 5th fastest growing rate. Vietnam's labor forces have also received much positive feedback from the international community. These are the two main factors helping Vietnam to attract foreign investors.
In the next few decades, the Asian demographic will undergo great changes, becoming aging populations, more prosperous and with lower birth rate. These changes will create a big shift in consumer behavior. The growth of upper middle class will boost consumption. Investors have forecast that Vietnam, Bangladesh and India will have the highest increases in consumer spending, with Vietnam's growth rate came out on top at 7.8%. In Southeast Asia, Vietnam is expected to overtake Thailand in terms of people earning over $20 per day.
We see rising incomes, people get better employment because factories are being set up across Vietnam. So that is positive. But the combination of rising incomes and demographic shifts that allow for shifts in the consumer markets. So Vietnam is one of these markets that really emerges as a large consumer market by the end of this decade, bigger than some of the well-known European markets, such as Spain or France or the UK.
The great potential of Vietnam's consumer market will become an advantage in attracting large international enterprises to invest in the country.
The IMF has said that Vietnam will become the third biggest economy in Asia Pacific by 2025. What's happened during COVID is that the retailers are holding expansion, they're not growing at all, and so they're looking to other areas to expand in Vietnam for the future, for the retailers.
The IMF has assessed that Vietnam will become the third largest economy in the Asia Pacific by 2025. Therefore, Vietnam is attracting a lot of attention at the moment. During the COVID period, other major economies in the region almost froze. Retailers had to look for other markets to expand, and Vietnam is the future of retail. For investors, Vietnam is having a golden labor structure. According to Singapore's The Straits Times, experts said that over 400 Singaporean startups in the Global Innovation Alliance Accelerator programs see Vietnam as an attractive market with many advantages coming from the workforce.
The labor force in Vietnam is increasingly well educated and still relatively cheap compared to Singapore. Vietnam has a tech-savvy population and a burgeoning middle class, making it a potential pool of customers as well.
Singapore has always been a vital partner of Vietnam before and after the pandemic. Many venture capital funds now focus on Vietnam's key sectors such as health, technology, food processing, and blockchain. As many investors now see Vietnam as a prospective market, more opportunities are open for capital raising. With low cost of living, accessible transportation, many entrepreneurs overseas are coming to Vietnam to start their business.
Vietnam's economy is expected to grow by 7.2% in 2022, the highest level in the Asia-Pacific region. This was included in the World Bank's East Asia and Pacific Economic Update report, which was announced at its headquarters in Washington, D.C., the United States, on Tuesday morning, Vietnam time. Accordingly, the country's economic rebound was largely due to the recovery of exports and the release of pent-up demand following the removal of COVID-19 related mobility restrictions and more recently the gradual return of foreign tourists. In addition, economic recovery support program adopted in January 2022 provides room for additional fiscal support. However, implementation has been slow. 39.9% of GDP, Vietnam's debt is sustainable and significantly below the 60% threshold set by the National Assembly.